Investing can become a nightmare if you're not careful. As I've found out the hard way over the last 24 years as an investor, I've made far too many mistakes. And today, I'm going to give you 2 painful examples of what not to do. Then I'll finish on a positive, as I'll tell you how I've turned things around over the last 6 years as an investor. My nightmare with stocks. Let me take you back to 2010 when I first started working offshore in the oil and gas industry. I was getting to know my new colleagues, and they were all talking about making money in the stock market. This was mainly because some of them had made a small fortune with Rockhopper, which was an oil exploration company. I got serious FOMO and decided I wanted to buy some stocks so I could make game-changing money. The problem was I didn't have a clue about the stock market, about anything, and my only research was a quick look in the back of the paper, and I was also getting info from the lads at work. Something I wouldn't recommend. This, by the way, is a common mistake I've seen time and time again in my 25 years of working with people looking for quick, easy money. Anyway, long story short, over the next 12 months, I eventually lost our life savings. It was bad enough losing the money, but what was much, much worse was my mental health throughout this period. I spent too long looking at the price of my chosen stocks, and the stress progressively got worse. When I finally lost our life savings, the timing couldn't have been worse. My wife was due to give birth to our second daughter, and we were about to move into our second home. This caused me loads of problems with my wife, and I wouldn't recommend it. So if you want to avoid this nightmare situation, make sure you fully understand the asset you invest into. But we'll get to how to invest properly, the right way, in a few minutes. If you've had similar experiences, let me know in the comments. And if you want to avoid mistakes like this and learn how to invest long term, hit subscribe so we can build wealth together. I was dreaming of 100k and early retirement. Let me take you back to 2017 when I started investing into crypto. I still had little or no financial education, and I was still too reliant on what other people were telling me. Another mistake to avoid, because your investments are your responsibility. Anyway, my cousin had finally convinced me to invest, to buy some crypto in 2017, and told me about 3 altcoins. So I paid £2,000 into each one without doing any research. Over the next 6 months, I was back to checking the price of my investments far too much, maybe 20 times, even 30 times a day. Let's just say I became obsessed. And again, it didn't do me any favours from a mental health point of view. And my stress levels were far too high. At the start of 2018, my crypto started doing really well, and my initial 6,000 went up to about 30,000. I can remember driving to Gatwick on a Sunday night for work, dreaming about what I would do when it got up to 100k. A random number I plucked out of thin air. I was even thinking about early retirement. Let's just say I was very naive. As you can imagine, it didn't get to 100k. In fact, my 30k went down to almost nothing very quickly, and I was not in a good place. Please learn from this mistake. If you can handle crypto and the volatility that comes with it, with crypto investing, please take the time to learn how to take profits. That's my biggest lesson to date after investing in crypto over the last 8 years. As you can probably tell, I'm not a financial advisor, and nothing in this video should be taken as financial advice, but I do care, and things are about to get better as I tell you how to invest the right way. How I finally turned things around. Let me take you back to mid-2018. I was sick of making painful mistakes, and I was sick of whinging to my poor wife about our money worries, so I made a decision to sort my act out. I got into much needed personal development and started watching Tony Robbins videos, Jim Rohn videos on YouTube. It helped. By the end of 2018, I set my first ever goals. Then over the next 6 months, I read well over 50 books on mindset and investing. And by mid-2019, I started investing in the stock market, but this time with low-cost index funds. I've invested for me, my wife, and our 2 daughters every single month since mid-2019, and we've managed to get average returns of about 12%. Over the last 24 years, index investing has been my favourite way to invest by a mile. It's simple, set and forget, stress-free, diversified, the costs are low, there are loads of benefits. I've tried individual stocks, property, crypto, and low-cost index funds. Personally, I like simple, long-term investing with index funds. And when you look into it, this is how most people build wealth, most investors. Yes, you can make money with individual stocks and even things like crypto, but the harsh reality is that the majority of investors lose money with high-risk assets. chasing quick, easy money. From my experience, it doesn't work, but investing long term does, as I've found out with index funds and property. If you want to learn how to invest long term, see below for my most recent playlist. Summary. Over the last 24 years as an investor, I've seen too many people with too many regrets, and I'm sick of seeing it. That's why I've told you about some of my biggest mistakes in this video, and it's why I've told you what worked for me after focusing on financial education from 2018 onwards. You can watch videos on this channel, or you can join hundreds of other investors in my school community. The link will be found below. So, I've given you some mistakes to avoid, and one of the biggest mistakes I see all the time is people saving money and not investing. Normally it's down to a lack of financial education, like not fully understanding compound interest or inflation. If you want to learn why saving all of your money is potentially going to prevent early retirement, see below for a recent video.